Welcome back. Today on the Byte-Size Brief, we're going deep on Qualcomm, ticker symbol QCOM. We're unpacking exactly why this semiconductor giant stock has seen such massive volatility over the last 30 days. They dropped around 10%, despite posting absolute record-breaking numbers just a few months prior. We are looking at a company caught right in the crosshairs of a global memory shortage, an intense artificial intelligence arms race, and some major shifting loyalties in the smartphone market. So let's jump right in and figure out what's really going on here. Well, let's start by looking at CEO Cristiano Amon's bold vision. He recently came out and stated 2026 is going to be the year of AI agents. Now, this isn't just some off-the-cuff remark for a press release. It essentially sets the entire stage for Qualcomm's massive strategic pivot toward edge AI. You see, they don't just want to connect your phone to the cloud anymore. They want the artificial intelligence running locally, right there in your pocket, or seamlessly in your car. And honestly, this number brilliantly illustrates why Qualcomm matters so much right now. They currently hold an estimated 25% of the global smartphone chip market. So literally 1 in 4 smartphones relies on their silicon brain to function. But here's the fascinating twist to all of this. That exact historical strength in the smartphone market is suddenly becoming their absolute biggest near-term vulnerability as global supply chains start to fracture. To make sense of it all, here's our roadmap for today's tutorial. We're going to cover their toll road model, the recent records and Q2 warnings, the AI memory squeeze, the bull versus bear case, and finally, their roadmap beyond phones. All right, part 1, the toll road model. Let's strip away the complex semiconductor jargon for a second to understand how they actually make their cash. Basically, Qualcomm operates 2 main engines. The first is QCT, that's the physical side of the business, designing and selling the actual chips, modems, and processors that power your phones, PCs, and cars. Then you have the second engine, QTL, which handles their patent licensing. And honestly, this is where the magic happens, because this division functions exactly like a highly profitable, inescapable toll road. So the crucial point to remember here is that even if Qualcomm doesn't put a single physical chip inside a phone, their patent toll road still collects a fee on every 3G, 4G, and 5G device that connects to a network. Because they own the foundational intellectual property for wireless communications, they are pulling in incredible earnings before tax margins of around 77%. Think about that. It requires virtually zero additional manufacturing overhead. It's a brilliant, highly defensible moat. But it is heavily reliant on global handset sales volumes staying robust. Moving on to part 2, records and Q2 warnings. Let's look at how Q1's massive success contrasts with some very cautious warnings for Q2. If you were just looking at the start of 2026, you would absolutely think the sky was the limit. Q1 was a record breaker, bringing in $12.3 billion in total revenue, largely driven by incredibly strong premium smartphone sales. But then, the Q2 guidance sharply hits the brakes. They are projecting total revenue to drop down to somewhere between $10.2 and $11 billion. What's wild is their core handset revenue is taking a massive sequential hit, dropping from $7.8 billion down to around $6 billion. So revenue climbed quarter over quarter initially, but the forecast abruptly shifted. Why the sudden drop? Well, Wall Street hates uncertainty. And this sudden forecasted drop in the core handset division triggered some serious analyst downgrades. Firms like Bernstein actually cut their price target from $175 down to $140, specifically citing these handset pressures. This whole situation essentially pushed Qualcomm stock down about 10% over the last 30 days, creating the exact crossroads we find ourselves at right now. Which brings us to part 3, the AI memory squeeze. Why the sudden drop in expectations when consumer demand for devices is actually completely fine? Well, it's not a demand problem, it's a supply problem. To understand this, we need to quickly define the industry-wide memory shortage happening right now. On one side of the ring, you have standard DRAM, which is the memory used in everyday smartphones. On the other side, you have HBM, or high bandwidth memory. This is the highly coveted, ultra-expensive memory required by NVIDIA GPUs and those massive AI data centers. Because the AI boom is so incredibly lucrative right now, memory manufacturers are literally yanking their capacity away from smartphone DRAM and reallocating it to build data center HBM instead. And this creates a massive domino effect across the entire industry. Because AI data centers are essentially hoarding the manufacturing capacity, smartphone DRAM is facing severe constraints and huge price hikes. Since memory is suddenly so expensive, smartphone makers, especially the big Chinese handset OEMs, are taking a highly cautious approach. they're aggressively reducing their overall component inventory just to save costs. Because they're building fewer phones to avoid those high memory costs, they are cutting their chipset orders from Qualcomm, and boom, that is exactly why Qualcomm is projecting a roughly $1.8 billion drop in handset chip revenues for Q2. It's just a fascinating, though temporary, supply chain bottleneck. Let's dive into part 4, the bull versus bear case. This immediate memory crunch brings us directly to an objective look at both sides of the debate for Qualcomm's future. Let's look at the core arguments side by side. We really have to balance the very real, existential competitive threats against Qualcomm's aggressive strategic diversification. This is where you really need to pay attention to the numbers. For the bears, the glaring fear is absolutely Apple. Apple is notorious for wanting to own every single piece of their hardware stack. If Apple successfully vertically integrates and builds their own internal modems, shedding their reliance on Qualcomm entirely, while Qualcomm could lose a massive $7 to $8 billion annual revenue stream. Analysts estimate that's about $1.75 per share risk. Add to that the fact that Qualcomm is really struggling to penetrate NVIDIA's massive software and hardware moat in the data center, and you can totally see why some investors are incredibly nervous about relying solely on the cyclical smartphone market. But the bulls? They are looking completely past the smartphone. They argue that Qualcomm is rapidly transforming right before our eyes. They are projecting a massive 22% compound annual growth rate in their automotive and Internet of Things segments all the way through fiscal year 2029. The bull thesis fear is that this hypergrowth in non-handset markets will more than offset any eventual losses from Apple's departure. And their momentum in this space is staggering. They aren't just casually talking about cars. They are actively locking down the industry. Qualcomm is sitting on a massive $45 billion design win pipeline in automotive alone. We are talking about major expanded partnerships for advanced driver assistance systems with huge Tier 1 suppliers like Bosch, plus direct integrations with Volkswagen and Hyundai. They are essentially turning the modern vehicle into a supercomputer on wheels, and it's powered by Snapdragon. Furthermore, they definitely aren't giving up on mobile, they're just evolving it. A highly anticipated collaboration with OpenAI to develop a custom AI smartphone processor recently sent the stock surging 8.2% intraday. Partnering with MediaTek and Luxshare, they are aiming for mass production by 2028. This proves that edge AI, running advanced artificial intelligence right on your personal device without a laggy connection to a data center, is undeniably their next major frontier. Finally, Part 5, Roadmap Beyond the Smartphone. As they pivot to become a diversified edge computing powerhouse, what are the next catalysts we should be watching? Here is the exact timeline you should have marked on your calendar. Starting with tomorrow, April 29th, 2026, their critical Q2 earnings report is going to confirm exactly how deep this memory shortage is biting. Then, looking ahead to late 2026, we fully expect the specs for that custom OpenAI processor to be finalized. By 2028, we hit mass production for both those AI chips and the first wave of Bosch ADAS-equipped vehicles. And finally, targeting 2029, we'll see their ambitious 6G commercial rollout, where they plan to leverage that massive patent portfolio all over again for the next generation of connectivity. So that brings us to the ultimate question. Can Qualcomm's aggressive diversification into edge AI and automotive computing successfully outpace and fully offset the current smartphone slump, along with the looming shadow of Apple's vertical integration? Well, that wraps up today's deep dive explainer on Qualcomm. Be sure to drop your questions and your own takes in the comments below. We literally read every single one. Thanks for joining us on the Byte-Size Brief, and we'll see you in the next one.